Here's a money trap most people fall into. They keep the majority of their wealth in cash. Sounds safe, right? Wrong. In reality, cash is one of the riskiest assets you can hold long-term because it silently loses value every single year. The rich understand this better than anyone. That's why they never rely only on cash. Instead, they spread their wealth across assets that not only protect them from inflation, but also make them richer over time. Today, I'll break down the 5 assets the wealthy always hold instead of cash, how you can add them to your own portfolio even if you're starting small. Section 1. Precious metals, gold, silver, and platinum. Let's start with the classic, gold. For thousands of years, gold has been the ultimate store of value. Why? Because unlike paper money, you can't just print more gold. It's scarce, it's durable. And when inflation spikes, gold historically goes up. Here's an eye-opener. In the 1950s, 1 ounce of gold was around $400. Today, that same ounce is worth over $2,000, and some forecasts suggest it could hit $10,000 by the early 2030s. That means an investment today could 5x in the next decade. Meanwhile, your cash in the bank? It will buy you less and less every year, and it's not just gold. Silver, platinum, and palladium are also crucial because of their industrial uses. They're needed for electronics, medical devices, and even green energy technologies. Now here's the best part. You don't need to buy physical gold bars and store them under your bed. You can invest in gold ETFs, mining stocks, or even fractional gold through apps. It's affordable, safe, and tracks gold's price without the hassle of storage. Section 2. Industrial commodities, the new gold rush. Precious metals are great, but there's a second category the rich love: industrial commodities. Think about it. Silver is essential in solar panels and electronics. Cobalt and lithium are the backbone of electric vehicle batteries. Copper is in everything from wiring to renewable energy, and when demand skyrockets, so do prices. Here's an example. Cobalt was about $20,000 per ton in 2012. By 2022, it doubled to $40,000. Why? Because Tesla, Apple, and every EV maker on the planet needed more of it. Now, can you buy a ton of cobalt and store it in your garage? Of course not. But here's what you can do. Invest in mining companies like Rio Tinto or Glencore. Use commodity ETFs, or even trade commodity futures if you're more advanced. This way, you tap into the massive growth of raw materials without ever touching the physical stuff. Section 3. Safe haven currencies. Most people think the US dollar is untouchable, but history proves that's not true. Currencies rise and fall with governments and politics. That's why the rich hedge their bets with safe haven currencies like the Swiss franc or the Singapore dollar. Take Switzerland, for example. It has one of the most stable economies and banking systems in the world. That's why, during financial crises like 2008 or the Eurozone debt crisis, trillions of dollars flowed into Swiss francs, protecting investors while other currencies collapsed. Here's a real-world example. In early 2023, the Swiss franc traded at around 110 against the US dollar, giving holders a big appreciation boost. Now you don't need to open a Swiss bank account to get exposure. You can invest in currency ETFs or trade through platforms like Forex.com with as little as $100. This is why the wealthy always keep a slice of their money in currencies that stay strong, even when the world is in chaos. Section 4. Government-backed. Securities, sovereign guarantee. Here's a phrase you've probably seen on a dollar bill. This note is legal tender for all debts, public and private. What does it mean? It means that your money is backed not by gold anymore, but by the faith and credit of the US government. That's why another favorite wealth preservation tool of the rich is sovereign bonds. Things like US Treasury bills, notes, and bonds. Why? Because governments are the last entities to default. If the US defaults, the whole global financial system collapses, which is unlikely. Treasury securities pay better than letting your money sit in a savings account, and they're backed by the strongest government in the world. Section 5. Value stocks and dividend funds. Now, let's shift gears to growth. Because while safety is important, wealth is also built by growing money. Millionaires love value stocks, companies with stable earnings, strong fundamentals, and reliable dividends. of companies like Johnson & Johnson or Coca-Cola. They're not flashy, but they pay steady dividends and their stock price trends upward over time. Here's why that matters. A $10,000 investment in Coca-Cola in 1990 is worth over $160,000 today, without even counting dividends reinvested. 4. Those who don't want to research every company, there are dividend-focused mutual funds or ETFs, like the Vanguard High Dividend Yield Index Fund. These funds spread your risk across dozens of stable companies while paying consistent income. It's like owning a slice of America's strongest companies without having to babysit your portfolio. Climax: the rich versus the rest. Here's the big difference between how the rich think about money and how everyone else does. The average person saves cash. The rich buy assets. The average person waits to someday start investing. The rich start now, even small. The average person keeps all their wealth in one place. The rich diversify across gold, commodities, stocks, real estate, currencies, and collectibles. And that's the real secret. It's not about luck. It's about playing defense with safe assets, offense with growth assets, and always staying diversified. So now you know the 5 assets the rich always own instead of keeping their wealth in cash. Precious metals for inflation, industrial commodities for growth, safe haven currencies for stability, government bonds for security, value stocks for dividends. The question is, how many of these do you already own? If this video gave you ideas, hit that like button. It helps the channel reach more people. Subscribe if you want more deep dives into how the rich actually build wealth.